Hi there and welcome back to the course. We'll start with basic definitions you must know before starting your journey into the stock market. What is a stock or a share? First and foremost, what are stocks, or as some people call them, shares? Let's say you like chocolate. Let's also assume, for the sake of the course, that the chocolate you like is full of nutrition. Now you find out which company manufactures that chocolate, and after reading a little bit about the company, you like where the company is heading. So next time, instead of just buying the chocolate, you buy a part, or in other words, a share of the company. That's pretty much what a stock is, a small unit of ownership in the company. Now, let's assume again, just for the sake of the course, that you notice there's a change in the flavor over the chocolate over time, and you're thinking, hey, you know what? The company isn't focusing on the nutritional part so much anymore. Well, now you can just sell the shares of that company that you bought a while ago. The place where you and other investors can buy and sell ownership of such assets is called the stock market. So if you purchase a share of Tesla, you're literally buying a tiny ownership stake in the company. And since you're holding a few shares of Tesla, you'll be considered a shareholder who has a partial or even full stake in the company. So, what's the purpose of the stock market? All of this seems very fancy, but what's the purpose of the stock market? Well, it's pretty much the same reason as why you do a job. It's fun, and you earn money if you make the right decisions. If you ever need a household item, you go to a market or a store, right? Similarly, the stock market is the place where you buy shares of a company. The stock market serves two very important purposes. The first is to provide capital to companies so that they can fund and expand their businesses. The second purpose of the stock market serves to give investors, those who purchase stocks, the opportunity to share in the profits of publicly traded companies. So what does this really mean? Let's say you buy 100 shares of Tesla at $500 each. The price share goes up from 500 to 600 USD. The difference amount is the profit that you earned, or 10,000 US dollars. Pretty sweet, right? Obviously, you have to consider a lot of things when investing in a company. More on that in a bit. Investors can profit from stock buying in one of two ways. Some stocks pay regular dividends. Now, a dividend is a cash payment from a company to its shareholders. The other way, like we talked about with Tesla a few seconds ago, investors can profit from buying stocks is by selling their stock for a profit if the stock price increases from their original purchase price. So, how are stocks traded? Most stocks are traded on exchanges or the market, such as the New York Stock Exchange or NASDAQ. These are precisely what we refer to as the stock market. Stock exchanges essentially provide the marketplace to facilitate the buying and selling of stocks among investors. Stock exchanges are regulated by government agencies such as the Securities and Exchange Commission, or the SEC in the United States, which oversee the market in order to protect investors from financial fraud and to keep the exchange market functioning smoothly. Don't get confused though. Imagine if you go to 7-Eleven to buy groceries. Maybe you bought some apples. After you buy them, you notice that a few apples are rotten. So what's your first instinct? You decide to go back to the store and you demand to talk to the manager who can sort out your issue. The manager replaces your apples, your faith is restored, and the universe is balanced again. In terms of this analogy, the manager was the SEC who made sure that the store was running smoothly. That's exactly what the SEC does, maintains order and keeps investors away from harm so that they can invest and trade in the stock market freely. Common shares versus preferred stock. Let's talk about common shares and preferred shares. So, Have you ever noticed when you go to a restaurant how old people are always given food first? That's how preferred shares work. Common shares, on the other hand, that's the normal stock that gives its shareholders a right to vote at shareholder meetings, special dividends if and when a company declares it, and a claim in the residual profit, which basically means your claim after paying off all the dues of the company. Preferred shares have their own advantages as well, of course. In the event of liquidation of the company, preference shareholders are paid off before the common shareholders. However, preferred stock doesn't usually have voting rights. We'll focus on common shares in this course. Public and private companies. Moving on, have you ever observed how there's a restriction at some places where only a few particular people are allowed to visit, but at other places, anyone can visit? Well, that's somewhat the definition of public and private companies as well. The shares of private companies are not available for the general public. That's actually what makes public companies unique, because at some point they decided to sell their company to the general public through an IPO, or an initial public offering. IPO, in a nutshell, is the first time a company makes its shares available for purchase in the open market. Of course, an IPO doesn't guarantee that everyone will definitely get a piece of the sweet, sweet cake. But after the IPO process, anyone can buy the shares of that company and get those little pieces of ownership that we've talked about previously. So far, I hope everything is clear to you. We're talking about the basic concepts and definitions right now, and we will revisit some of these topics further in the course, so we're trying to simplify the complex stuff for you. What's an index? All right then, let's talk about index. Marvel Studios captures the theme of superheroes. Sherlock captures the theme of observation. And High School Musical captures the theme of typical high school drama. Similarly, an index is simply a list of stocks meant to capture a common theme. Even if you know absolutely nothing about stocks, you must have heard about the S&P 500. This is one of the most well-known indexes and is made up of the 500 largest publicly traded companies in the U.S., like 3M, Amgen, Kohl's, Lowe's, PayPal, Pfizer, and many more. Of course, there can be more than one index. We also have the Dow Jones Industrial Average, which comprises 30 large U.S. stocks, such as McDonald's, Cisco Systems, Coca-Cola, Caterpillar, and ExxonMobil, amongst others. The prices of all the underlying stocks in an index are used to create the overall price of the index.